Welcome to TQ Talks, where taxes meet planning. Here's your host, Craig White.
Welcome back to another episode of TQ Talks. I'm your host, Craig White, and in today's session, we are going over, Lord, the question people ask or we see all the time at all the workshops we attend and the people we talk to, especially, CPAs, attorneys, etc. They always quickly tell everyone when they're setting up a business, you should be an S-Corp. Make sure you're an S-Corp. It's the biggest tax savings ever. It's like, oh, God, it's such a tragedy on our side. But we are going to break down when does an S-Corp actually make sense and what it is, right? And how it makes a difference between an LLC structure and actual S-Corp. And we get it, guys. We know a lot of business owners hear that, man. You need an S-Corp. I mean, we hear it all the time when we see some people, they come to us and we look at it and we go, why did you even, this person told me that and the savings is going to be, and we're like, oh God, I wish people would stop doing that. Does an S-Corp save you money? Yeah, it can, right? Are you wasting your money if you don't elect an S-Corp? That's, these are all things we get from people. But the reality is not every business should be an S-Corp. Right? Not every business needs to be. Timing matters, your profitability matters, your operations matter, your compliance is another thing that matters. Because an S-Corp is a business entity, or I should say it's not a business entity, it's just a tax election, right? It's a strategy that's being used in order to help you and position you in the best possible ways to save money. That's all it is, right? It's an election. So let's start this out. Let's get into it. Segment 1, right? First thing we're thinking about. What's an S-Corp? Like, what is it actually? Well, there's things that you have to think about. First, when you set up the business, normally, I should say, there's LLC and there's an S-Corp confusion. Everybody goes through, I don't know what I am, and then you get that text or that email or that call. What is it again? What am I doing? LLC is a legal structure, limited liability company. That's it. That's what it's telling you. It's look, we fill this out. It might be single member, multi-member, ends up being a partnership, but it's still the same thing. It's just, listen, it's me. I'm doing business. I want to let everybody know I'm doing business. And it's not just me being out the basement. I'm trying to set up an actual structure that does something. The S-Corp on the other side is how I treat this LLC, how it is taxed. There's a difference. That's about it. So businesses elect to be taxed or treated as an S corporation. That's what happens. It's the taxation of that same LLC. So it changes how you are taxed. That's all. So in your brain, just know that you can be an LLC legally and be taxed as an S corp. That's what those forms are for. When we fill out those forms, the 2553, we send it in. We are asking the IRS, hey, this LLC that's here, right? Pumpkin LLC wants to be treated or taxed like an S-Corp. They have followed the rules. We're not going to probably go into all the rules of it, but they are functioning as such, and they would like to be taxed as an S-Corp. But there's purposes. If you're not making, I got to watch what I say. I was going to say considerable amount, but if you're not making ... we always say the same thing. We said, I think in one of our previous or a lot of our others, 50, 60, 70, 80,000 net, 9 out of 10, it's probably not the best decisions for you, right? And that's a discussion to be had. But the real reason why people constantly echo S corporations being where they want that taxable structure to be is because they're saying, hey, you're getting heavily taxed if you stay as an LLC. Because an LLC or self-employment tax is going to live with the LLC. If you are an LLC, single member, et cetera, and you do the Schedule C form, you are paying self-employment tax on all profit. So if you're netting 50, 60, 70, 80,000, we spoke about it previously, then you are paying the 15.3% on that. Now, it's not really because IRS splits it in half with you, but we're not going to go into that. Either way, you're paying taxes on that. The S corporation structure splits the compensation because what they're assuming is, the IRS is assuming that you're going to pay yourself a reasonable salary. So we'll use round numbers. Let's keep the 50,000. You're netting 50. Okay, you're paying taxes, self-employment tax to be specific, in addition to regular taxes on that 50,000. When you end up changing that structure to be an S corporation, you're supposed to, big air quotes, put yourself on a reasonable salary. Let's pretend the reasonable salary is $10,000. That means that you're going to pay self-employment tax on that $10K because you have a W-2 coming in, Medicare, Social, etc. The other $40K ends up being distributions, and you're not paying self-employment tax on that. And so, of course, it saves you money. And that's when it becomes something that is beneficial to you. But the conversation starts once the profits are growing and growing consistently. So if you made $50,000 in 2023 and $30,000 in 2024 and $34,000 in 2035 or 2025, we're probably not having this conversation. Do you understand? But if the revenue, the net, is going higher and higher every single year past the numbers we keep talking about, then the conversation starts to make sense. We start to see consistent profitability from the business, and it ends up becoming where we can have what's called predictable income. And you're saying, okay, this might be something to discuss. We're not just having a good month. We're not just having a spike because of something we did, depending on the type of business you're running. Consistency matters when we're making that S election discussion or decision, right? Owners have to understand what the business is doing. We talked about reviewing your tax return on the previous podcast and understanding what's going on between your gross, your net, and your expenses and all that other stuff. But all those things matter when you're trying to discuss or figure out if you're dealing with an S election or not, right? So payroll becomes a point of conversation when you make the S election. Payroll taxes is something that comes up that a lot of people can't stand dealing with. You have W-2 responsibilities. You have bookkeeping that usually ends up becoming part of it because, again, the growth of the business becomes more complicated. So the responsibilities, board meetings, etc., of having an S corporation election changes the way things are for your business structure. Clean records, separating business from personal, no commingling, right? We talked about, again, payroll on there. There is way more to do when the election is switched than just keeping it as an LLC. Now, in all actuality, you should be doing all these things regardless, whether you're a single member LLC or an S corporation. But when that election is made, you're telling the IRS, I'm following certain rules and guidelines. I'm letting you know this is the kind of things we're going to be doing. You have a checklist, blip, blip, blip. We're not going to get too detailed, but you're saying, listen, my profitability is high. I'm doing well. I'm going to put myself on payroll. I'm going to follow certain instructions. And so here's why I'm doing it. So again, it's whether or not you are electing to be an S corporation or be taxed as an S corporation usually falls in the line of profitability. But you also have to understand that responsibility as a business owner increases when you make that decision, right? So again, you have to plan a lot better as an S corporation election. Planning starts to matter a lot more. If your profitability is lower, I'm using smaller numbers, $10,000, $20,000. It's like, okay, cool. I got it. I got some expenses. I do my little thing. Okay. And then you move on. But when you're grossing and when you're netting, I should say $100,000, $200,000, $300,000, $400,000, $500,000, this is a moving part, right? And you need to say to yourself, okay, I need to pay more attention to what's going on. Am I going to be under more IRS scrutiny? Am I paying attention to reasonable compensation? What exactly is that, Craig? What are we talking about? Am I paying attention to quarterly payments, right? Because again, if you're netting 10, 15, 20, it's not that serious. Even if you didn't pay quarterly, your underpayment penalty, right, is not as severe as someone who's turning around with $200,000, $300,000 worth of profit year after year. So you have to understand what's going on in the business for you to figure out whether or not it makes sense. The things business owners should review before making that S election should be some things you could write down. Is my business profitable, and is it trending profitability year after year? Look at your current tax return. Look at the previous tax return. Pay attention to it. Can I handle payroll structures and expectations? Meaning a salary for yourself, maybe salary for other people, depending on what their role is in the company, because it might not just be you. Am I comfortable with bookkeeping either by myself, because now again it becomes more complex, or hiring out? Am I projecting future growth? Am I being compliant with the state? Thank God we're in Florida, so it's not that serious or difficult, but there's other rules in other states. Am I comfortable with the cost that it's going to be? Because you're paying more to file that S election. That 1120S is going to cost you more than the Schedule C, no matter how we run it. I don't care what company you go, what business you're dealing with, whoever you use, it's higher fees. That's what it is. You have to deal with it. And of course, there's administrative responsibilities. Because 9 out of 10, if you're making this much more, if you're jumping up in income and it's consistently going, there's delegation that has to happen. So the question isn't whether S-Corps are good or bad. Because I know people say that, am I supposed to do it? Should I change it? Should I not? We're not going to sit here and bash that statement. Again, I'm not a fan of everyone immediately telling someone to go there and to do it. It's the first thing you ought to know. You shouldn't. The real question is whether your business is at the stage where the strategy actually makes sense. Does this make sense for my business where I am currently and where I'm projected to be? That's what you need to pay attention to if you're deciding, again, that you want to make a change in your business structure and your tax treatment. So if your business has grown and you're wondering whether your current structure still fits, we're back on a planning conversation, a tax planning conversation, and it's worth having before the year is over with, right? It's worth having. It's worth for you looking second, third quarter to make that decision before the close of the year. So that election is already in, and when you file your taxes, what are we in 2025 or 26? So 27, when you go to file your taxes, the election is already made, and you know how to operate because you've already been speaking about this moving forward. We know this is helpful. We thank you for your time. That's all we have for TQ Talks for this week. Any topics that you want us to go over, please let us know. We appreciate all the information you give us. I know that we've been talking on a solo. I know we're going to have a guest coming up, and there have been topics that you've sent. I am very much aware of the information that you're asking us to go over. Some things are falling into our second quarter discussion and planning, which is why I'm going over it now. Some things, I don't know. I don't know if we can put them in right now because some people are asking about some third quarter things, bigger tax planning opportunities. Like they're trying to figure out, well, what are those tax planning opportunities, meaning entity changes or payroll, etc. One of the other questions that we got, which we always get, is when do I know if I should put my kids or should I put my children on payroll? That's another question that keeps coming up, and we're definitely going to go over that. But again, what is a reasonable salary was the other one that we see a bunch of times, and we will get to those on next episodes of TQ Talk. So again, like, follow, share, find us wherever you get your podcasts. My son will do the outro. Thanks for joining us. We'll talk to you next week. Later.
Thank you for listening to TQ Talks. If you enjoyed the show, please rate and recommend on iTunes, SoundCloud, or wherever you get your podcasts. You can also get more information at tqfinancials.com.